Hey guys, it's Robin Hart with the Home Loans with Hart team at CMG Home Loans, back from a great vacation in Dominican Republic with my family. So thanks so much for the time off, but we're ready to get diving in and definitely show you what's happening, not only with the market, but also some other fun stuff with regards to housing, the Fed, and even a fun little thing of what's happening and quick little thanks to TikTok. So let's dive on in. All right, weekly rates. Here's where we're at. National lenders. Now, if you see a loan officer grabbing their chest anytime soon, you might think they're having a heart attack, but what they're having is an antacid moment. And what's happening is that rates have skyrocketed. Most rates are actually well above 7%. You've still got jumbos and 15-year fixed below 7, but that's pretty much why everybody's like grabbing their chest or eating antacids. It's not fun for us. It's not fun for the clients. And it's definitely cause for some antacid moments. So let's talk about what's happening. The bond market has been negatively responding to some recent news. And as you can see, things like down 92 basis points, which is negative for our rates. Another day we were down 72 basis points over and over. We're getting these bad pieces of information. And basically what's happening is we'll receive 3 different bullet points of bad information for the economy, but one bullet point will pop up and the Fed actually clings to it. So every time they go on the news, they're actually clinging to those positive pieces of information. Case study 1, ADP employment numbers came out, and they came out over the top, 497,000 jobs. They were expecting 299, mid-size employees, 183,000, small employees, 299, large down 8,000. Now, what's happening? Breaking down the numbers. It's interesting. The BLS jobs report, which is what the Fed pays attention to, has this year decided to commingle basically seasonal work and temporary workers and part-time workers even. So a Taco Bell employee is the same to them as like a 60-year-old IT professional that makes a 6-figure salary. So how this breaks down, and let me kind of break it down for you on this screen. Bobby, who is a high school graduate, decides to go get a job. His first job is bagging groceries. He spends about 3 to 4 weeks there and decides, hey, I'm not really getting a whole lot down. I don't really see the purpose of my job. Even at, Aldi, they bag their own groceries. So you know what? I'm out of here. And after 4 weeks, Bobby decides to quit that job and go to the Golden Arches. At the Golden Arches, he learns how to flip burgers, stand in one place, follow the rules, blah, 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 but he doesn't enjoy the grease, doesn't enjoy flipping burgers. So then he leaves there, but he loves the fact that they pay day to day. So then after about 5 weeks at McDonald's, he's had enough of that and he goes to the Bell. At the Bell, he works there 3 weeks, doesn't like Mexican food that much, and then decides, you know what? Let's go to Domino. And at Domino, I can deliver pizzas. Mom and dad can pay for the repairs on the car. And guess what? I still get paid every single day. So now he's at Domino's. But unfortunately, the BLS looks at it as that's 4 job hirings in a 6-month period. So unfortunately, the way they're reading the numbers, it is actually overinflating these numbers, especially if a kid starts a job at the beginning of the month, quits it in the middle of the month, and then starts another job at the end of the month. They're in the report twice. So that's another whole other issue. So here's what's happening, though. The Fed sees these numbers, sees they're off the charts, and thinks, oh my God, inflation's out of control. We haven't conquered it. We haven't tamed it. We're still going to need to raise rates. There is some disagreement. Some think they need to raise the rates a bunch before the end of the year. And some, just a couple of them, think they just need to raise it a quarter point more, maybe one more rate hike. Because the economy's not quite slowed down quite enough. So what is this doing? On mortgage applications, it's actually dropping at another 4.4%. What's even more worrisome is home purchase applications are dropping even further. So after rising 3 straight weeks, demand massively drops. Why? Because once that target trajectory over 7%, a lot of home buyers have never seen rates that high, and it just scares them a little bit. All right. So the average loan size we're seeing on these purchase applications is about 423,500, and it's the lowest since January. Now, does this necessarily mean that houses are falling? No, it just means that either down payments are increasing or lower income borrowers are actually applying. These are borrowers that might be first-time home buyers, might be entering the pool more so than have in the last couple of years. Now, house hunting is already tough, but guess what? It might just about be getting tougher. In the last week of June, the number of homes for sale fell below year-ago levels for the first time in 59 weeks. New listings in the last week of June were down 29% from the same week a year ago. What does this mean? As mortgage rates cross over to 7%, you have fewer applications, and with fewer homes, you're obviously going to have fewer home sales. However, some big kahunas came to the market this week. University Park Mansion hit the market for $20 million. So some big numbers and big players are still willing to list their homes on the market. But guess what? They know and have a long-term expectation on these things. They don't expect it to sell in less than 30 days. So this University Park Mansion is 14,000 square foot mansion on Vassar Avenue. It's got a price tag of $20.5 million. That's a price per square footage of $1,464. You can invite 6 couples to come stay with you. They each would have 1.25 bathrooms and apparently a rose garden and a 9-hole putting green to hang out with you at. So if you need help with that loan, give me a call. And next up, this hit the stage this week. People were asking questions about whether or not boomers are to blame for the housing shortage. As they age into their retirement, baby boomers have been reluctant to leave their home and sometimes even their second homes, especially where they find their costs are affordable. The result is that 38% of Americans that are homeowners of age 65 or older have lived in their home for more than 30 years, with another 39% having lived there for more than a decade. So yes, that is true. They do hold on to their homes. It is more affordable. They actually have paid for their homes. They deserve it. They get to stay in it. They wouldn't want to move in a nursing home that costs $4 to $5 grand a month. So can't really say as I blame them, but I can understand the feeling and sentiment on it. So good news of the week. TikTok came through with this Army veteran. Apparently he wrote out a book and was defeated when pretty much no one showed up to his book signing. But after a TikTok video went viral with 15.6 million views, this author now wrote Lee Howard and the Ghost of Simmons Pierce Manor, and it's become the #1 bestseller on Amazon. So I think he might have actually overshot the moon, because New York Times only requires you to sell 3,000 books to be on their bestseller list. So at the end of every video, we ask, when is the best time to buy a home? And the answer is the best time to buy is now, because we know there's still a housing shortage and it's not going to be fixed for another 5 years. No matter what the interest rates are, you can always refinance and you always move forward in refinancing and securing a lower rate at a future date. You can also be building up equity while you're living in the home instead of paying rents to someone else. So I'm Robin Hart with the Home Loans with Hart team of CMG. And if you guys need any help when it comes to buying, selling, or even advising as to where and when and how you should finance a home, we are here for you. We've got some great down payment assistance programs. We've got some great programs in general for vets, for general home buyers, FHA programs, you name it, we've got it. We're here to help. I'm Robin Hart with the Home Loans with Hart team, and we look forward to helping you get into that home. Talk to you soon. Bye.